Welcome to Core Finance, live from London. Sponsored by Beaufort Securities, live on Facebook, Core Finance Facebook page, Twitter handle @Core Finance TV. I'm joined by Matt Brown, market commentator here at Core Finance. Morning to you, Matt.
Morning, mate.
Right, let's kick off market movers. FTSE trading down as heavyweights trade ex-dividend. North Korea is still front and centre. Ex-dividend, 41 points or so?
Yeah, anyone looking at the FTSE straight off the bat will see it's down about 40, 50 points this morning, but that has nothing to do really with the market. It's all about ex-dividends. Huge ex-D day. We've got BP, Shell, AstraZeneca.
21 constituents.
Yeah, pretty much. So that's why the market's down, but it's not bad news. But aside from that, North Korea is still front and centre. I mean, that could drive the markets over the coming days. So look out for announcements, obviously, from Trump and North
Understood.
Korea.
Let's move on to the FTSE one to watch, Coca-Cola.
Yeah, well, this is Coca-Cola Hellenic Bottling Company. So it's not Coca-Cola, as we all know, the big US company. But this stock came to market. They basically bottle Coca-Cola within Europe, mainly Eastern Europe. They are doing very well. A late Easter, hot June meant more people were buying fizzy pop in Europe, and a great set of numbers out from Coca-Cola HBC. Now, they've actually said excellent results. So a CEO to come out and say that is positive. The stock's trading up 8%. It's in the FTSE 100. It's not been on the radar of many investors, but have a look at it. Interesting stock and performing well.
The only thing I could say, I do hope, that the ice cream sales in August improve.
Indeed.
Right, let's move on to AIM. AIM one to watch, UK oil and gas. What are the headlines there?
Well, we spoke about this last week. They've had a good update, drilling update, flow update with a license. Everything seems to be going to track. There's a lot of chatter, though, going on about the stock, and maybe that's delayed. Again,
the drilling delay.
The drilling delay and the flow update delay. Don't think there's anything in it. The stock's come off. I mean, it rallied up from about 2-3 pence up to 8p last week. It's now trading around 7p. A lot of stock, a lot of chatter, trading hands. Could be market makers just moving the stock around to flush out some private investors. But
Understood.
take a look at that, quite active this morning.
Let's take a look at currencies. The Great British Pound, Euro against Great British Pound 90.43, and cable, Great British Pound against the US dollar 129.66. So we're below the 130, 132.
Indeed, tested it yesterday, got back up above 130 and dropped back down again. Little bit of dollar strength, as that's seen as safe currency, safe haven currency, so dollar strength. But worth noting, we had about 20 minutes ago some industrial production numbers out from the UK. The trade balance numbers were weaker than expected, but industrial production numbers stronger than expected. It looks like for June, industrial production is back on track.
Totally understood. Broker forecasts, the broker updates, RBC, that's Royal Bank of Canada. The company Unilever, new recommendation, underperformed from a sector perform.
Yeah, the reason I picked this out, no price targets from them, but RBC are basically saying, look, we don't think Unilever can continue to deliver. It's been a darling stock, the consumer stock.
A world-class name.
A world-class name, a dividend payer as well. And we've seen a flow over recent sessions into defensive stocks. So this is quite a bold call from RBC saying, look, actually, we think the stock is now overvalued and maybe it's time to trim positions if you've got it.
Understood. Let's talk about the core number, 2007, 2017.
10 years, a decade. What we're looking at here is actually the rise in certain products and services, things that have changed over the 10 years. So we'll start off with butter. It's been in the news a lot recently. The cost of production has gone up. There could be a butter shortage in the coming months. The price has moved from 91p in 2007 up to 146. So that's an incredible move in the price of butter. I'm also looking at the change in cable. We've already mentioned that. It was trading at 211, wow, above the 200 handle there. Now, obviously, just below 130. What does that mean? The strength of the pound has weakened in those 10 years. And also, a couple of other things. National debt has gone from 534 billion up to 1.6 trillion. So what does that mean for UK PLC? Well, goods and services, products are more expensive. So we've had inflation, wages have been held down, and national debt has continued to go up, despite conservative promises that it would come down. So
that's not a great decade.
if they were company results coming out,
yeah,
you'd be a seller for choice.
Understood. Right, let's wrap up with the economic calendar today. In the UK, we've got the GDP estimate, and in the US, we've got the PPI, jobless claims, Fed Dudley speaking, and 7 o'clock this evening, the monthly budget statement. Right, quick final thoughts.
Yep. I think the market's trading sideways. Look for defensive stocks. Again, look for any comments coming out from North Korea, Trump. I think that's going to drive the market ahead of some strong big US data, I should say, coming out tomorrow.
Matt Brown, thank you very much indeed.